Now, South Korea's markets watchdog says it had found breaches of short-selling rules by 7 more banks in the domestic stock market. That's as it investigates into trading practices at foreign investment banks. Authorities in November imposed a blanket ban on all forms of short selling until the end of June this year and put into place a new monitoring system designed to detect illegal shorting of domestic stocks. Now, in its interim investigations results released today, the watchdog says it has found illegal trading by 9 banks, and this includes 2 that have already been fined out of the 14 foreign investment banks being probed. It has encountered trading violations totaling nearly $155 million so far this year. The other 5 banks are still under investigations. Now, South Korea has said that the short-selling ban will stay in place until adequate measures are prepared to prevent illegal trades. Now, the move has been heavily criticized by institutional investors who say it would hurt the market's appeal among global funds.
So, Roland, short sellers facing the heat in South Korea. Just explain to us, first and foremost, why traders practice short selling in the first place.
Well, it's a way of making money when the market is falling. An investor basically borrows shares and then sells them on. So he doesn't own the share. So he waits for that price of that share to fall, buys them back in the market, and then hands them back to the lender. So what happens is that the investor pockets the price difference, and then the counterpart who actually lent them the shares then makes a commission off that. So while short selling is legal and considered a legitimate investment strategy, what South Koreans are planning to do or wanting to do is to stamp out naked short selling. And that's the illegal practice where traders actually sell shares that they haven't borrowed in the first place.
Right. So, Olin, when it comes to South Korea, what is the impact on the market? And I guess the bigger question is, why are the regulators trying so hard to control this?
Well, the government really basically wants to stamp out a naked short selling because it causes what they say excessive market volatility. Think of the global financial crisis of 2008. Think of the Eurozone sovereign debt crisis of 2011. Last year, it became a politically motivated move because of the legislative elections. That's because a big voting group, that's the retail investors, domestic investors in the country, actually said that they were unhappy with short selling because the stocks price of stocks were actually coming down. So they blamed the big investment banks for causing the price to fall, shorting those shares. But it has to be said there is actually very little conclusive evidence that that is the case. But meantime, officially, the financial watchdog says illegal short selling has been one of the reasons why there is that Korean discount. Now, the Korean discount refers to the fact that compared to global peers, Korean shares are actually trading much lower in valuation. And that's mainly because due to a few contributing factors, not just short selling, but also the fact that they pay out less dividends, as well as the opaque organization structures of Korean chaebols.
Right, many thanks for your insight, Roland Lim from our business desk.